I mentioned last week we'll have some fun this week. And what I want to do today is I want to show you what a lender sees when you call and you ask for interest rates. So I thought what I would do is this is a program that many lenders across the country use. It's called Optimal Blue. It interfaces with whatever front-end system the lender might be using. So when you call a lender and you're wondering what are interest rates, or someone asked me what are interest rates, Mimi was in here a moment ago and Mimi said, hey Greg, what are rates? Well, it's not that a lender doesn't want to tell you what the rate is, but as you're going to see today, it can change dramatically based on the information on the particulars of that loan. So I thought we would do is I'll use your input to plug numbers in here, and then you'll be able to actually see what the lender sees. And this is live. This is, right now, this is what it is. That doesn't mean it won't change in an hour or two. It certainly will change tomorrow, but this is what it is right now. All right? So to start with, let's start with a sales price. And what sales price would you like me to use?
Use $425.
Well, how much?
$425.
$425. Okay, now, what loan amount do you want me to use?
$325. Oh, I was going to say do 400. Say that.
400?
$25,000.
Now watch. So that's 94.12%. So that's going to qualify at the 95% level. That's how it's going to jive. I'm going to change this permanently, and we're just going to put in 3 months, not 6. We're not going to go 36. Okay, now, so it automatically estimates the value and estimates the appraisal at whatever price I put in, and it shows loan amounts. So now we've got a 95% loan. Now, what do you want me to use for a FICO score?
740.
740. All right. And I'm going to say that they're not self-employed. And what about a debt-to-income ratio?
40%.
40? 40%. Oops, why didn't that take? No, there we go. All right. I'm going to say no first-time home buyer. Property type, single family. Is that okay for now? All right. I'm just going to keep it at Georgia Cobb. Yes.
Would first-time home buyer make a difference on the interest rate?
It won't make a difference on the interest rate. It will make a difference on the down payment amount that they can do. And we'll leave this one at conforming, and we'll do FHA in a moment. We'll have some fun with this. So now I've got to put in here some interest rate. So I'm just going to put 6, just for the fun of it. Now, when you see this, you're going to see all of them come up. So now we've got enough information in there, and I click Submit. And on this scenario, let's go to here, conforming 30-year fixed. All right, now let's take a look here. Now you can see at 6%, 100 is what we call par. That means no points. All right, that's what it is. 100 is no points. If it's 100.283, that means that the borrower, not the lender, the borrower is going to receive $1,132 toward their expenses, toward their closing expenses. If I go to 5.75, it's going to cost the borrower $2,388 to get that interest rate. Does that make sense so far? So kind of a fun little thing. You can see exactly what it does. It shows what the principal and interest payment is. So when I'm working with your clients and people say, what are your interest rates? Let's plug it in. Let's take a look. And then what we do is we start examining which of these makes the most sense for them. Now, in this case, for $1,100, they can save $32 a month. Now, does that make any sense? Well, it may or it may not. It depends on their situation. You've heard me say this before. I personally think interest rates are going to come down in 2 years during the presidential election. Don't know for sure, but if it does, like it has the last 4, then that means that I want to make sure that if I'm going to spend, in this example, there's a $1,200 difference here. If I'm going to give up $1,200, I'm going to save $32 a month. Well, that's only, $380. If I refinance in 2 years, the 6% rate's better. But that's just the way I do the analysis. But now let's go back so you can see this, right? All right, now let's go back. And this is why when someone says, what are the rates? This is what makes it so difficult. So we go back here. Let's don't change a lot. Let's change a little. Let's take the FICO score. How about if we go to 701? You okay with that? We're only going to change one thing. 701. Submit. You remember what it was before, right? All I changed is the 740 to 701. Look at this. The cost to get the 6% rate has gone from a credit to $2,900. Just like that. One change, that's all we made. That's it. If you look, there's not even a par rate on there, is there? There's nothing at 100, which means every one of these loans is going to cost the borrower money right now on that conventional loan. Does that make sense? You see that? That's why when you ask me what interest rates are, or Mike will say to me on Wednesday, what are rates? What do you want me to tell you? They're all over the board. And we've made one change. So let's go back.
What if their desired rate's 4?
I'm sorry?
If you put desired rate, you keep putting 6. What if you put 4? What would happen?
If I did what?
Under desired rate, you put 6.
Oh, it doesn't make any difference. It's going to show you all the rates.
Got it. Okay.
I just picked one over there.
Got it. Okay.
So now let's change this. Let's make one change. Let's go from conforming to FHA. All right? Now again, we're putting down 5%, not 3.5%, but watch what happens. Look at this. There's not even a par rate for FHA. This has been going on with FHA and VA for almost 5 months. There's no par rate. Now, if we go in, and we're going to do it in a minute, we're going to change the FICO score a little bit. But if you go above 700, like this one's 701, if you go much above that, then we try to put them into a conventional loan rather than FHA if we can. But take a look. Look at this gap. There is no 5 3/4. There is no 5 7/8. There is no 6%. It goes all the way to here. Would anybody even consider 6 1/4 versus 5 5/8 when the difference is only under $300? Nobody would. I don't even know why this is on here. It's kind of goofy, don't you think? So now, can I give them a lower rate? Yes, but look at the cost. So today, when we're doing FHA and VA, it can make a very big difference. Now, we're going to make a change in something. Any questions before I go on? All right. Let's go back. Let's revise this. We're going to make a quick change here. Instead of single family, let's have some fun. Manufactured double wide. Watch this. And this is with a 701. Why is it? Come on, be nice to me. All right. Look at that. $11,571 to get that rate. And the only thing we did is go from single family to manufactured housing. That's all we did. Isn't that nuts?
Does move to townhome or condo affect it that much, or just to manufactured?
Let's do that. Let's do that. Let's go. Great question. But we're going to go back to conventional, okay? Because FHA, we're not doing much in terms of condos on FHA today anymore. So let's put a condo here. Let's change this. And let's, if it's okay with all of you, I'm going to change this back up to 740 just for the fun of it, okay?
You said FHA doesn't do condos?
No, I didn't say that they don't do condos. We haven't been doing much in condos because the whole complex has to have FHA approval. And there's not a lot of them that have FHA approval today. And spot approvals are gone for FHA. So let's take a look at this. So we changed it to condo. Now you remember this one from before. 740, if you recall, with this scenario, 6 1/8 had an $1,100 credit. All we did is go from single family to condominium, and we went from a credit of $1,100 to a cost of $3,800. Only change we made. So when you ask me what interest rates are, what am I supposed to say? I don't even know what to tell you because it varies so drastically. Now, if we change this, because I think you asked about townhomes, townhomes are typically treated just like single family. We should, if I'm correct, well, I wonder if maybe what else did I change? Nothing else. Something else changed. So 6 1/8 is still showing a cost. I'm just curious myself now. Now let's go back and put single family in there again, because I don't know why that one changed like that. That shouldn't have changed. At least I don't think it should, unless I changed another parameter in here somewhere. I don't think I changed anything else.
What's PUD?
What's that?
Plan use development. There was a drop down for townhome. Right.
You know what might have happened? We may have had a price change. While we're doing this, there may have been a pricing change in the market.
Oh, yeah.
So Greg, what are interest rates?
Yeah, exactly. What are interest rates? I mean, gee whiz. Yeah, there had to be a pricing change because everything's gone up. Just like that.
Wow.
While we're sitting here, you're seeing it.
I saw that it had county in there. Will the county affect?
No, county does not affect it. No, no. Nope. All right, now let's take a look at something else. We've got a conforming loan in here. Now I'm going to show you this. Let's go to revise search. Let's change this from, let's make this 500. Let's change this to 350. Oh, I don't want to go that low. 425. Okay, 85% loan to value. You see that? 85%? Let's see what we get here. Single family, 740, blah, blah, blah. We're pretty good. All right. All right, so you can see 6 1/8 is priced at $884. All right, this is a 15% down payment. Now, we're going to go back up here, and we're going to change this to 400. And we're going to submit. So 20% down versus 15% down. Come on. It cost $1,000 more. So interest rates with 15% down get a better deal than a loan with 20% down. I know that sounds really weird. And by the way, this is not me and my company. This is across the board. This is Fannie Mae, Freddie Mac. So everybody is the same. So this, you can see, it was $832 with 15% down. Now it is $1,830. It's $1,000 more with 20% down. Now, let's go back. And let's make this 75%. So this is a 25% down payment. $780. So it's roughly $50 less expensive than 15% down and $1,100 better than 20% down.
Is it always that way, or is that just kind of what it is
No,
today?
it's always that way. 5, 10, and 15% are basically going to get the same rate depending on your credit score and DTI. Then you go to 20%, you get a little bit higher, about an eighth higher, as you can tell. And then if you get 25%. Now, if we kept doing the same thing, then what you'd find is that if we go to 70% loan to value, you get another break in the rate. And then if you go to 60% loan to value, you get another break. So let's make one other change. So you saw this, $780, okay? And we're going to make one other change. They're putting down that much money, and they absolutely insist on waiving escrows. So now they are not going to have an escrow account. They want to take care of it themselves. Well, that's fine. $1,718. About $940 more that they're going to pay so that they can have the privilege of handling their own escrow account. So again, I go back to that famous question everybody likes to ask the lenders, what's your interest rate today? What am I supposed to say? I don't even know where to begin. We've got to get a lot of detail, because if you just plug in any number, what's going to show up? Now, so before I go on, anybody have a specific example they'd like to look at? This is pretty good. We actually saw a price change right in the middle of our presentation. That's pretty good. That doesn't happen very often. Okay, so let's change this. Oh, let's make it different. Let's do 300. And so what would that be? 300 times 3.5%. Somebody got that quickly for me? How much?
10,500? Or 105?
So 2,
10,000.
290, 500 maybe?
I think 289.5.
289.5.
What is it?
289.5.
2,
89?
2, 8, 9,
500.
500. Okay. Okay, now we got 96.5%. Now let's change this to a more realistic FHA situation. Let's go to 681. Single family home, leave all that stuff the same basically. And change this to FHA.
What about the escrow waiver? You're gonna leave that?
Oh, thank you. I would have missed that because you can't waive escrows on FHA. Thank you. So, in this particular case, this borrower, 5.6, again, no par rate in this situation. The borrower is going to get a 5, and probably in this case would get 5.625, and it would cost them $1,747. Questions before I go on? A couple more things to show you before we wrap up. One thing nobody has asked is, Greg, can the lender pay any of this if it's discount points? And the answer to that is yes, maybe. April 1st of 2011, the CFPB made all kinds of changes. And one of the changes said that loan officers could no longer, the company that you work for, could no longer charge, if I want to give a credit, they could no longer take it out of my commission. Changed April 1st, 2011. So if the loan officer wants to give a break and say, hey, I'm not going to charge you $1,747, we're only going to charge you $1,000. They have to get permission from the company, because the company's the one who's going to eat the $747, not the loan officer. Now, most companies today will give the loan officers a threshold, a certain amount of basis points that they can manipulate a little bit to help out to be competitive, whatever the case is. All right? But that's why loan officers are oftentimes a little sketchy. They're not trying to be evasive. It's just hard because the credit is going to be eaten by the company, not the loan officer. All right? Nobody's asked that one, but down. So now let's go back up here and let's look at this. You wonder why it's going to be so difficult sometimes when you read some of these things about first-time home buyers having problems. $638, we go below that $640 threshold. Huh. 5.625 is now costing $4,692 to get that loan. So when you ask your lender, what are my closing costs going to be? That nice little sheet that I've given everybody, if you don't have one, let me know on closing cost estimates. If you don't, now what's not included in there are these discount points. And you've got to plug in those discount points because that's what somebody's going to have to pay. The buyer, the seller, the lender, somebody or some combination is going to have to pay that. All right, questions? So the next time you ask me or another lender, what are interest rates? Wait a minute. I've got this, and this. The rate for that might be about what? Now, because it'll probably change in an hour. Well, not an hour, but tomorrow, except in the case of this example where it changed right in front of us. All right? Well, you've been wonderful. Thank you. I hope this helps a little bit, just give you a little insight as to how much one thing on these loans can change. So if you change the loan amount, drop it more than 5% or so, 15% gets a better deal than 20%. FHA doesn't have a par rate basically. You know that you're going to be, if you go from if you go from a single family to manufactured home, price just goes berserk. If you go to a condo, pricing goes up. If you want to waive escrows, pricing goes up. All right. So, all right. Thanks everybody. Appreciate it.